Cool. All right. So we're with Bridger Pennington, the owner of Black Bridge Holdings, which is a privately run debt fund, right? So before we even talk about your business, kind of tell us your origin story. Because I actually read a little bit about what or how you started. You know, you want to get into investing. You started multiple businesses, 7 businesses to be exact. Some made money, some didn't, until you met a mentor. Can you kind of just reiterate or go beyond that?
Yeah. So I was like, probably a lot of people listen to this show, wanted to be an entrepreneur, wanted to make the fat stacks, right? And thanks for having me on the show, by the way. It's going to be fun today.
For sure.
I got into college. My first 2 years of college, I started 6 businesses. I did real estate wholesaling. I did online marketing. I built websites for people. I did a Chinese tutoring business. I speak Mandarin Chinese. I mean, we had like 9 tutors. I mean, these were, by the way, these were not like business ideas. These were legit up and running businesses making money. Did 6 of them in 2 years. And I was like, hey, I just got to keep swinging the bat, just keep you got to hustle, right? Wake up. And I was doing it. And I grew up in a very average household. My dad drove a pretty crappy car. I mean, it was average, right? It was pretty normal. My dad was an entrepreneur, so I kind of grew up with that mentality. And my dad finally grabbed me. He goes, Bridger, you're kind of like a chicken with your head cut off. Go meet with one of my business partners. I think he can really help you. So I said, okay, whatever, I'll do that. So I went up, I set this appointment. I go up, I drive to this dude's house. It is amazing. I mean, I pull a gated community. It's on the top of this hill. And this house almost engulfs a whole cul-de-sac. He's got all these nice cars. I mean, huge wine cellar. I mean, the whole thing, it's like a 10,000 square foot house. We walk in and I'm just amazed. We sit down, we start to talk, and he starts to chat. And I finally ask him this question. I go, how did you get all of this? And I kind of pointed at everything, and he kind of laughs. He goes, Bridger, not very many people ask me that question. And I was like, oh shoot, I don't know. You're not supposed to ask rich people that question, I was like, okay. And he's like, no, it's fine. I'll tell you, but just not very many people ask me that question, which is interesting. But he goes, I want to explain to you the secrets of the rich, the secrets of the very wealthy families. These are the Romney family, the Trump family, the Vanderbilt family. This is what these families do. Is they all are involved in the fund world. I was like, what do you mean fund world? Private equity, hedge funds, venture capital, family office funds, okay? And essentially what a fund is what he explained to me. He goes, in the most basic terms, a fund is a pool of money that investors put money into that pool, and then people like me and you, fund managers, can draw from that pool and go invest into certain areas or certain things, or grow a company or something. So a lot of people watch Shark Tank. That's similar to a venture capital fund. It's a pool of money. Sharks or investors can grab from that pool and invest in a bunch of small startups. Hedge funds, they grab from that pool of money. They go invest into public securities. They go trade the S&P 500 or Forex trading or cryptocurrency. Private equity funds go take that pool and they go buy businesses. So he taught me this whole thing about funds. And I was very intrigued. He goes, if you look on the Forbes 100 list, there's a lot of people on that list that started funds. It's one of the most lucrative vehicles in the world to make money. And and he goes, about 10 years ago, I started a fund, and we started this fund, and currently we manage $8 billion of real estate at the time. Which, to put that in perspective, so Cardone Capital, everyone knows Grant Cardone, probably watching this. Cardone Capital has about $1.1 billion of real estate in it, okay? These guys at the time were $8 billion, 7 times bigger than Grant Cardone. And I was blown away. I was like, wow. And now they're almost triple that of where they're at. And I was very intrigued to say, well, and I've always heard you got to find a mentor, right? I'm sure you guys talk about that on the show. Mm-hmm. Find a mentor, right? And so I was like, hey, can you be my mentor? It's perfect, right? Can you help me out? I'd love to do the same thing. He goes, Bridger, go talk to your dad, because your dad knows way more about this than I do. And I was like, no. Like my dad, we live in a small house. He drives a crappy car. Like, you live in this night. Like, can you be my mentor? He goes, Bridger, me and your dad make about the same amount of money. And I was like, huh? My chin almost dropped to the floor. I was like, what? And at the time, I'm like 20 years old, something like that. And I drove straight to my dad's house. I was like, Dad, what the heck? Like, are you serious? Like, you're making all this money? Like, what's going on? He kind of laughs. He goes, well, Bridger, I like to save and invest my money. My partner likes to spend his money. But yeah, we run this billion with a B, billion-dollar fund. And you, by the way, can interrupt me if you like. But he sat down with me and started to teach me about funds, how funds work, private equity, venture capital, hedge funds, walked me through SEC, the Securities and Exchange Commission, SEC, the laws behind it, all this kind of stuff. I was very intrigued. And the traditional path to get into a fund is you go work on Wall Street. You go to be an investment banker, consultant. You work 100 hours a week. You work, I mean, seriously, to the bone. You're working every day of the week, all day, every day. You then do an MBA for 2 years, and then you do another 6 or 7 years to gain experience, become an associate, and then maybe you can start a fund. And that's the typical route, I guess you'd say, to launch a fund. So I was like, okay, I'll do it, right? So I was on that path. And currently, by the way, just for people, I'm 25 years old right now. So I'm right in your demographic of people we're talking to right here, right? With Gen Z, millennial. Okay. So I'm 25 right now. At the time though, I was younger, and I got an offer to go work in Silicon Valley, 6-figure offer, stock options, bonus, the whole 9 yards, right? Like that was sweet, right? I'm like, wow, this is awesome. And I looked at the path that I was going to be taking, right? You can choose paths in life, and the path that would take me, okay, 2 years there, I'd do my MBA, and then it'd be about 10 to 12 years before I could, and my goal was to launch a fund. And I was like, okay, that's one path. And then I looked at my dad though, and his partners, and a lot of them didn't do that path. A lot of them had done, some of them barely even graduated college, right? And they were entrepreneurs, and they found different. And I thought, I love the quote, people overestimate they can do in 1 year and underestimate they can do in a decade. And I looked at that and I said, man, I've got a decade in front of me. I wonder if I went and did my own fund and went out and did it and followed that different path. So long story short, I thought back to a previous company I was working at. They had this opportunity where I could lend money to some of their clients. These were small loans, like $5,000 to $7,000 a piece. I thought this would be an interesting idea. So I talked to the owners of the business. They loved the idea. I went to talk to my dad. He helped me structure this fund together. I was very excited. We got the whole fund figured out, structured. I was like, I'm going to launch a fund. Like we're going to do it. I'm turning down the offer, 6 figures. Like we're doing this fund thing. Okay. And I kind of overlooked the one thing to have a fund is you need to have money. Like that's like the most basic piece of a fund is like investors. Right. And so I was like, shoot, what am I going to do? I was like, well, wait, like my dad, he's rich. He likes to invest. He likes my fund. He'll invest in my fund. This would be great. So I remember it's a late Sunday night. I walked into my dad's office. I went to pitch him on the fund. And I remember I was like, Dad, I went through all the numbers. This is going to be great. I said, Dad, how would you like to be our first investor into our fund? And he kind of laughed. He goes, Pritchard, he goes, I have the money to invest. But if I invest in your fund, I would ruin the experience of you raising money on your own. And it was a big, tough love moment between me and my dad. And he said, I'm not going to invest. He kicked me out. He said, you got to go figure this out on your own. And I took him up on the challenge. I went out after about 3-4 weeks of pitching. I was able to raise money I raised $49,000 from 6 different investors. And if you know anything about funds, that's very small. That's teeny. Okay. But it was enough for us to get started because we're doing these small micro loans. They're like $5,000 a piece. So we started doing these loans with a little pool of money. Our first investors got a 64% return, and they were very excited. Like, this is awesome. So since then, we launched our second fund, and we've grown like crazy since then. We've done over, I think, 370 something deals like that. We deployed millions of dollars out of our fund. It's grown a lot since then. We're looking to launch another fund here pretty soon, and it's been awesome. And I turned down that offer. I've launched my own fund, and now we kind of teach people how to launch funds as well. And we're all in the fund space. Is what we do. It's the bread and butter. This is what we eat, sleep, and drink funds. So that's kind of the story of how I got started and got in this space.
Wait, so when you asked your father to invest in your fund, yes, he said no, but to kind of make sure that you figure out on your own, which is a good move in some way. But did he offer you advice, any like mentorship during your journey of making your hedge fund, or was he just completely on the other side of the fence and not helping you at all?
Yeah, great question. No, my dad is the best mentor I've ever had in my entire life. Still is. He is always willing to mentor me and help me in any way, shape, or form besides money. So yeah, I've used him a ton as and he was very great at helping me structure it, get it set up, and all that kind of stuff. Yeah.
Okay. So if you mentioned that you need to have all this credibility, go to school, get an MBA, and then maybe open up your own hedge fund, right? But then you realize you can do it on your own. Now, there's so many moving parts when I think about this, opening a hedge fund, because number one, of course, you need to have the money. And then 2, you need to find a way to get a return on investment for your investors, right? Yeah. Now, the hard part, or one of the hard parts, is how do you incentivize people to join your hedge fund if you have no credibility?
Yeah, great question. This is a lot about the stuff we talk on my show and other places. is we call it the fund launch formula. And this is a 4-step formula we've designed to help people like me and you launch funds. The traditional route, if you did the Wall Street route and did all that, this is how they launch funds. They go, hey, I've got a great idea. I'm going to spend, and then to set up your fund, typically it's about $30,000 to $100,000 to spend on legal fees to set up your documents and stuff. So they spend anywhere from 30 to, so let's call it 30 grand on that. And then they go pitch investors and they say, hey, I'm from Harvard. We're so smart, blah, blah, put money in. If investors can put money in, they get started. If they don't put money in, well, they're still stuck with a $30,000 legal bill. Lawyers are going to get paid, right? And they go back to work, right? So we have developed a different way to launch a fund. We call it the fund launch form. I can go through that if you'd like. But it's a way that people like us can, without a Harvard MBA degree, can launch funds and actually do it very successfully. This is how I launched my funds. This is how my dad launched his first $100 million fund. It's interesting. On my show, I bring on only people that have launched funds unconventionally, that didn't do the Harvard route or whatever, and they all follow the same formula. So the 4-step formula. So first, step number 1. So my dad told me, a lot of people like the Harvard guys, they'll want to go set up their documents, do all that first. He goes, step number 1 is this, and this is the example he gave me. I'll give this to you as well. He goes, Bridger, imagine that me and you just found a Lamborghini Aventador in Billings, Montana, and we can buy it Saturday morning for $50,000. Okay. And I was like, what do you mean? He's like, no, it's everything's checked out. We have a mechanic. This is a legit Lamborghini. The lady, she's selling it. She just needs cash really fast. She's going into bankruptcy or something. She needs to sell it. It's all verified. Okay. Just go with me. This is an example. Just go with me. 50 grand on Saturday morning. We have a verified buyer Monday morning in California that'll buy this car for $200,000. Okay. He goes, just go with me as an example. Let's just say it's all checked out. It's all verified, but you have to raise $50,000 by Saturday morning. Okay. You can't use any of your own money. And he goes, Bridger, this is my dad telling me this, and I'll tell you the same thing. Could you raise 50 grand by Saturday morning? And I kind of thought about this and I was like, maybe a former boss or like an aunt or a college professor. I was like, yeah, and they go, everything's guaranteed. You're going to make 150 grand this weekend if you can raise 50 grand by Saturday. And I was like, you know what? I was like, yeah, I think I could talk to enough. You know what? I was like, yeah, I think I could do it. Like, it's guaranteed. He goes, it's guaranteed. I go, yeah. He goes, what about 100 grand? You've got to raise 100 grand by Saturday. I was like, you know what? Yeah, I could do that. Like, I'm going to make 100 grand this weekend. Like, yeah, I could raise 100 grand. Like, yeah, I'm doing it, right? I'm all in. He goes, why? And I go, because it's foolproof. It's all guaranteed. The deal, it's an amazing deal. And he goes, aha, there it is. I'm like, what do you mean? He goes, it's not, I love that Tony Robbins quote. It's not a lack of resources. It's not a lack of money. It's a lack of resourcefulness. He goes, 3 minutes ago, you were telling me, oh, I'm too young. I'm inexperienced. I don't have the track record. I don't have the Ivy League degree. But all of a sudden, you're telling me you could raise $100,000 by Saturday morning. Why? Because the deal was so good. Investors, when the deal is that good, investors look past you. They look past all the credibility. They look at the deal, and they're going to invest in the deal. Mm-hmm. He goes, Bridger, step number 1 of any fund that you're going to do is find an incredible deal. A deal that's as good as that, right? That you'll put your life and limb on the line because it's all guaranteed. And when I say deal, that could be a trading strategy, like a hedge fund. It could be a business you want to buy. It could be, we have a couple of guys in our group, they buy and sell Amazon businesses, okay? You see all these Amazon guys starting Amazon businesses? Guys like us, we just go, great, we'll just buy up your businesses. They buy up 5 or 6 of them, put them under one roof, and ta-da, now that's a fund. That's a small private equity fund, right? And those Amazon businesses all help each other. So step number 1, find incredible deal. You can interrupt me too if you have questions. After you found that deal, a lot of people, the next thing they say is, oh, well, let's hire lawyers, 30 grand, let's do it. Like, hold on. Before you go hire lawyers, step number 2 is frame the deal out. So go on an Excel spreadsheet, run the numbers, go through everything, okay? Get a pitch deck together. Make sure it's all, how's everyone going to get paid? How's the whole waterfall going to work? Okay, that's step number 2. And then step number 3 is go and pitch investors. Go find those investors. Go in the boardrooms. Go pitch people. Hey, I'm getting this deal together. You want to put money in? And you might say, well, Bridger, I don't have my legal docs done. I can't do that without having my entities legally set up. It's like, it's okay. That's what you do. You walk into a room, say, hey, I'm pitching you on this fund. We're raising $5 million. This is the deal. Hey, I'm not from Harvard. However, you're smart. You've done real estate before. Look at the deal. Poke holes in the deal. Tell me where it's not working. Tell me why this real estate doesn't work. If you can't poke any holes in it, can I put you down for $500,000? And they'll look at it and they'll run the numbers. They'll bring on their real estate friend. And if it all checks out, so yeah, can I put you down for a commitment of $500,000? Now, verbal commitment. They go, yeah.
Mm-hmm.
You go, hey, our legal docs are going to be done in a couple weeks. But if everything checks out, would you put down $500,000? And they'll say, yeah. And you get commitments from investors, soft commitments, and then and only then you go set up your legal docs. Because guess what? If you go pitch investors and no one likes it, or they poke holes in this, maybe something you didn't think of, you're like, oh, shit, I didn't even think of that, right? And nobody puts money in, well, no worries. You didn't waste any money. All you wasted was a little bit of time, right?
Mm-hmm.
And you can go back to the beginning, maybe find a new deal, restructure the deal, right? And then, so let's say you got the investors all in on step number 3, you pitch the investors like it, then you go set up your legal docs. And guess what? Your investors paid you to build the fund for them. You can use that. Let's say you raised $1 million. You can use that $1 million to set up your legal docs. 30 grand. Okay. Write that off. It's a business expense. It's an asset of the fund. And ta-da, you have a fund set up that can go and buy those Amazon businesses. Right. So that's kind of a quick and dirty run through the fund launch formula. Step number 1, find a great deal. Find that Lamborghini Aventador, or find a house you're going to flip. 2, frame it out. Number 3, go and pitch. This is your market testing. In a fund world, you test the investors. That's your market. You market test investors, get ideas bounced back and forth. If you pass step number 3, then and only then you do step 4 and get the legal doc set up.
For the longest time, I thought a hedge fund was only for investing in stocks, but you mentioned that, that your partners, they invest in Amazon businesses, right?
Mm-hmm.
That's actually, for the longest time, I thought it was just stocks. It's crazy.
No, well, you're right. So when I say fund, there's a few different types of funds out there. So hedge funds is a type of fund.
Okay.
And yes, you're right. They trade in stocks, hedge funds. There's also private equity funds. Same model, but instead of investing in stocks, they go buy private companies. So there's a hedge fund out there, KKR, Blackstone, Caesar's Palace, ADT, Claire's are all owned by the same company. Nine West, Aeropostale, almost Victoria's Secret is all owned by Sycamore Partners on Wall Street. It's a private equity fund, okay? So same model, same fund, but they buy up companies. So there's hedge funds trade, private equity companies buy private companies, venture capital like Shark Tank, they invest in small startup companies, but it's the same fund. It's the same model of running a fund. Does that make sense?
Yeah. Something that I wanted to mention before was that I find that this business model is really cool and different, because most of the entrepreneurs that I talk to or that I hear on YouTube, it's mainly just purely real estate, e-commerce, drop shipping, retail arbitrage, but that's like the new money, right? Whereas this hedge fund, private equity is something that's been along for such a long time. And you can kind of say it's old money, but you're still applying it now, just in different principles and different strategies. So I think it's a really cool business model, something that's kind of refurbished in a way that can appeal to the younger audience as well. Because like you said, you don't need to have 10 years of experience, 10 years of going into Harvard and working in all these companies. You can start whenever, as long as you find that deal.
Yeah, exactly. And like, for example, we have a guy in our group. He was a house flipper. So you mentioned some people flipping houses, doing wholesaling. He flipped a couple houses. Now he just set up a fund. He's going to flip 72 houses in the next 18 months because of a fund. It allows you to scale. Other guys, I mentioned Amazon businesses. If you run a successful Amazon business, you'll probably run into the problem of having to buy and sell inventory. Stripe or PayPal will hold your money. A fund just allows you to have more money, right? You can apply it to a lot of different, there's so many types of funds out there. There's funds that do almond farms. They go and buy almond farms, like literally like the nut almonds, like they buy those farms together, group them together, and they sell them. Okay. There's funds that do solar farms. I know of a fund, they use that pool of money to go buy scripts from broke writers in Hollywood. They buy them for like 30 grand or 20 grand. Then they turn around and sell them to Netflix and HBO and Hulu for like miniseries. They sell them for like 100 grand, 200 grand. Okay, that's all their fund does. So there's a lot of opportunities out there. A fund essentially in itself is worth nothing. A fund you attach on to another business idea or a business vehicle. and it allows you to scale. Is what it allows you to do.
Now, as generic as this question might seem, how do you find, depending on what industry or what business you're really working on, how do you find that big deal? Like say you're in real estate or Amazon. I feel like these deals have to be really lucrative and really big in order to incentivize returns for all your investors.
No, it's a great question. Yeah, how do I find that initial deal, right? So number one, first way is I would say you yourself start working in that industry. So start your first house flip or start trading cryptocurrency, or maybe get a little bit of money together and buy or start an Amazon business, right?
So be knowledgeable at least in that field.
Yeah. Second option though, which I think is a lot easier, if you're starting from nothing, is partner with somebody who already knows that niche. So right now I'm partnering with a guy, we're starting a new fund. I don't know that much about real estate, to be honest, at all. He knows a ton about real estate. He's done all these transactions, all these deals. I mean, we're going to do a lot of real estate with him. I'm like, hey, okay, I know how to run funds. So I'll be the fund guy. I set up the fund, the structure, I'll get the money in, and I'll just give it to you and you just go do the real estate. And he's like, perfect, right? I call these guys broke geniuses. There's a lot of them, okay? And they're not broke. They're making $100,000 a year trading their small account, or they, flip a couple houses, but they have no idea how a fund works, how to raise money. And so they partner with guys like me that can help them scale and grow. So the two guys in our group, I mentioned Amazon, that business. The one guy, he had started, I think, like 6 or 7 successful Amazon businesses, started them, sold a couple of them. I mean, he was really good at Amazon. The other guy, the other partner, he's like, I don't know the first thing about Amazon. However, I do know a lot about running a fund or raising money. And so they partner up, and now, they have a very successful fund / Amazon business that just scales and grows.
Yeah, I can see why, this sounds so appealing to people, because yes, you can start your own business, start small, but if you have a hedge fund, you have a lot more resources, a lot more capital to work with. And if you have a lot more capital to work with, you can make substantially bigger gains, So it's a big difference between having pools of money compared to just having your own initial capital from your back pocket, right?
A lot of people, like, I was this way. I don't know if you've ever thought this way. Like, you hear, like, on a show, like, everyone's like, oh, you got to invest to make money, right? But I was always like, well, to invest, I need money in the first place. Like, this is so annoying, right? Like, and so I always thought, like, well, I'm going to make some money and then I'll save it and I'll invest it and buy real estate or whatever, right? This shortcuts the entire process. You can become an investor now using OPM, right? Other people's money, and you use that in a fund. And you can start. So never say it's too big of a deal, right? A fund allows you to buy up a $35-40 million apartment complex, right? Good deal. You can do it. Money's there.
So say you're knowledgeable in the field, you find a partner, and you find that deal. Now the next step is to pitch the investors, and you get the money, right? Now, I know that we can go on and on about the logistics and the paperwork of how to set up everything, but how do you kind of return, or how do you set up systems in place so that your investors get their money? It's not like you send them money through Venmo or something like that. How do you set up those processes?
Yeah, good question. By the way, every fund is a little different. So you can decide that's the best place. Like, funds actually they are regulated a lot, but once you launch a fund, you get to make a lot of the rules of how your fund's going to run. So some funds will say, hey, every 4 months, every quarter, every 3 months, whatever, every 6 months or every year, we're going to do a distribution where you're going to get paid out. Some funds say, hey, only at the end of the fund, we're going to get paid out. So for example, so for a fund, let's say it's $1 million fund, we're going to go buy up a couple of small real estate projects. Okay. Investors, I would do what's called a capital call. So like the terminology, a capital call. I'd call the investors the money from the investors. It would come to my bank account. We would go buy up, let's say we're flipping houses, they're $200,000 a piece. We'd flip 5 houses. We flip them all, right? When they're done flipping, right, we sell the property, the money comes back to my account, and then I pay my investors, like through a wire, essentially back to them. You're talking about systems, a wire back to them with their principal. So if they put in, $100,000, they get $100,000 plus how much we made, right? And you do it, the term is called pro rata. So essentially pro rata how much money they put in. So if they put in half of the $1 million, they would take half of the gains that go to investors, right?
Mhm.
So it's just percentage of how much money you put in, you get back, and then they have the money back in their account. And then I say, hey, you know, you got paid back. Let's do another one, right? If you want to reinvest it, and they can put money into the next deal. Go from there. That's one example. There's lots of different ways to do it. But that's one example of how it would work.
Okay. So I mean, I don't know too much about the stock market and hedge funds like that, but let me ask this question. So I do have a TD Ameritrade account, and of course you can see everything, you know, the returns, how much money you put in, etc.